On that note, let's get to Kevin Green, who joins me to take a look at some of the top stories. And we're seeing this sort of continued unwind from yesterday's regional bank concerns there, Kevin. However, it seems that the markets are sort of grappling as to whether this is going to be a contagion risk or this is indeed contained. And in fact, I've just seen a few of the banks out, at least as some of the analyst commentary sort of saying that this could even be a buying opportunity, buy the dip on what some think is a bit of an overreaction here. But what's your read on things this morning?
Well, we did see an aggressive sell-off when it came to the regional banks yesterday. And obviously this morning we actually are seeing a little bit of a bounce back. If you're looking at the KRE, it's up about 1.4%. But obviously there's some concerns when it comes to the auto lending market just in general. There have been some issues about bad loans for certain banks and other banks looking at potentially some fraud claims as well. So you are seeing a little bit of a concern. For now, I mean, you have to look at this as a situation where the market has been at very frothy levels. We know that lending standards may have been relaxed here a bit over the last couple of months, and if not years, in order to try to obviously expand money supply and as well as to try to expand margins for some of these regional banks. But we are seeing a snapback today. If you're looking at the earnings announcements over the last 24 hours, we haven't heard too much around this particular situation. A lot of banks that actually did report earlier this morning did show some pretty resilient balance sheets, as well as net interest income coming in at a very healthy level, to say the least here. So for right now, I think it's just another one of those risk items that we'll keep on the radar, but also maybe adding to some of this kind of sell the news, de-risk in the market type of events here, rather than something that's systemic.
Yeah, and I suppose it just goes to speak to some of the vulnerability in this market when you really are priced to perfection, sort of to your point as well, KG. But as far as some of the commentary out this morning, it does look like the exposure is fairly limited for now. But I suppose what we saw yesterday as you and I closed out the session, we saw that sell-off. It was really giving the market some flashbacks to that bank run, no doubt, in 2023 with SVB, etc. But just moving on, what are your expectations now for volatility and also options expiration too?
Yeah, so we do have options expiration today. It'll be a pretty decently sized expiration, but it all should lead to increased volume as well. And so we'll focus on that. If you're kind of looking at the E-mini S&P 500, we actually have seen an area of resistance that we just kind of touched here, this volume weighted average price level, and also aligning with this channel, which we did break overnight here. So let's see how the market actually resolves this. Do we get back into this channel formation going into next week? I think that's going to be very key. And when you're looking at volatility, right now we are in a slight backwardation, just meaning that near-term volatility markets are priced a little bit higher than the longer-term or longer duration volatility markets. That's something that's a near-term event that usually doesn't last for too long. Either you see the back end of the volatility curve actually moving up to normalize, and or you see near-term volatility kind of crushed to the downside. So if you're an options trader, this is a premium type of selling environment. No matter if it's premium selling to the upside or downside, whatever your flavor is, this type of environment actually does provide a lot of opportunities for traders, and we'll see how this actually pans out. We have seen over the last couple of trading sessions, Sam, where the market has tried to recover losses, or we're even up 1%, and then once we get to around 1 o'clock Eastern time, we start seeing some selling pressure going into the market. Do we see that de-risking type of an event happening going into this weekend as well? I think that's the biggest question. So keep your eye out on the volatility markets. We were trying to bounce here, but we did break some key technical structure when you're looking at the S&P 500 futures contract, which I think is very key because it reflects what's happening also overnight.
Yeah, and I suppose let's see what happens between Besant and his Chinese counterpart as well, whether that offers sort of a floor as far as, some of the concerns around the US-China relationship, because no doubt that's been seen as sort of laying the groundwork for a potential Xi-Trump meeting, because as we know, these things are sort of highly choreographed and planned. But let's switch to the commodity space as well. I mean, another record for gold before a slight pullback there, no doubt taking a bit of a breather, but also oil set for another weekly decline. What are you seeing out there?
Well, the gold markets, obviously, there's a lot of FOMO here, but it does appear, if you're kind of just looking at the overnight trading and some of the volume, that we might be near a little bit of a consolidation range or potentially a blow off top. So far right now, if you're looking at the volume, today's volume has already exceeded yesterday's volume, and we're probably going to be looking at probably one of the largest volume days for gold throughout for year to date, if you will, for 2025. And let's see how this candle actually shapes up. Is it going to turn into a bearish engulfing candle? Who knows? But the gold trade has been a really good trade. Obviously, we have seen this trajectory to the upside be very aggressive. This is something that's a little bit abnormal when it comes to gold. And you could also see a situation where those that are trading that do see some equity volatility actually do sell some of their gold positioning because it has been very profitable as well. So has been trading more as a risk on asset rather than risk off. And so do we get that same type of reaction if we do see equity markets pull back? I think that's the biggest key here. But the volume for today, I would not be surprised if it's top 3 trading volume throughout the whole year if you're looking at the December contract.
Right, and it's not just obviously gold that's been profitable as well. I mean, if you were a metals trader, sort of broadly speaking, you'd be pretty happy right now with the performance this year. How are you looking across the broader space?
Yeah, if you're looking at some of the other commodities, if you're looking at like platinum actually was down fairly aggressively. It is down about 7% early on this morning. Once again, kind of a bearish candle that's taking place, higher volume. Palladium doing the same. The metals trade has been very profitable, as you said, but at some point, is it really going to be that sustainable? Now, there are some structural and fundamental issues when it comes to the market, especially if you're looking at silver, which you could make the case that it could have more room to run. But some of these other metals that have been a little bit underloved over the last 2 years, 3 years, have now caught a bid. How long can that also sustain itself? So I think it's more of a risk-on type of mentality when you're looking at the metal space, and we'll see how this actually pans out. But if you're looking at palladium, if you're looking at platinum right now, that actually does look fairly bearish, at least for today's candle. Bearish divergences really kind of reflecting in a lot of these markets as well. And we'll see if this is just a minor pullback or if this is something that's going to be structurally changing here in this market. I don't think it's a really good sign that you're seeing gold sell off with equity markets, though. If you're utilizing it as a safe haven asset, it seems like it's lost that luster over the last couple of weeks and months.
Yeah, it's certainly been some interesting dynamics playing out in these markets recently. Thank you so much, Kevin, for getting us across that, and also your look on the metals market this morning. Appreciate your time.